Petronas has expressed concerns over potential cost overruns and delays in completion of the $6.6 billion Coastal GasLink pipeline in Canada, concerns that have been echoed by JV partner LNG Canada. In a statement released over the weekend in response to the EdgeMarket.com's queries, Petronas calls the pipeline a critical infrastructure that will connect Canadian natural gas to global markets. The national oil firm says it is concerned about CGL's forecasted costs and scheduled performance, and that it will work together with the other party to understand the basis for any changes and provide recommendations on proceeding forward. Petronas says it still remains committed to delivering the first LNG cargo by the middle of this decade. The Financial Post reported on March 1st that LNG Canada CEO Peter Zebedee had expressed disappointment with contractor TC Energy, which said that work would be delayed due to COVID-19 protocols. RAM Rating Services has downgraded the ratings of AMMB Holdings and its banking subsidiaries to AA3 from AA2 due to the 2.83 billion ringgit settlement related to 1MDB. The outlook on the ratings is stable. The subsidiaries are AmBank Malaysia, AmBank Islamic and Am Investment Bank. Equivalent to roughly 2 years net earnings, RAM says the substantial cost will reduce the group's absorption capacity to withstand credit headwinds amid the COVID-19 pandemic. To be incurred in the fourth quarter of FY21, the provision for the settlement is estimated to erase 2.5 percentage points from AMMB's Common Equity Tier 1 capital ratio. Meanwhile, 3 more senior executives at AMMB sold their shares in late December. Last Friday's boss filing showed that Raja Maimuna Raja Abdul Aziz, MD for Wholesale Banking, sold 85,600 shares or 0.003% at RM3.66 per share on December 29, 2020. The other 2 executives include AmBank's Group Chief Risk Officer and MD for Business Banking. Coincidentally, filings with the exchange in December showed that 4 other senior officers also sold shares on the 2 trading days. AMMB shares closed 1.71% down at RM2.87. Genting Group-owned Resorts World Casino NYC and Miami Hilton have filed a suit against more than a dozen insurers, claiming they wrongly denied coverage for some $500 million in losses during the pandemic. The insurers, which include a unit of American International Group, are being sued by Genting Americas for the losses caused by COVID-19-induced shutdown orders, news portal Law 360 reports. Genting Americas operates the only casino in New York in Queens County and the Hilton Miami in Florida. According to Genting, both properties had to limit or completely cease operations during the shutdown and implement new safety measures that the insurers should have to cover. In the suit filed last week, Genting said that it had turned to insurers to honor their coverage obligations. However, they had shirked their obligations, denied coverage, and abandoned Genting and their other insureds in their greatest hour of need. Genting says the U.S. Gaming Commission's regulatory act in closing the casino is enough to trigger coverage, adding it doesn't need to show any physical loss for this specific type of coverage. More boardroom changes have taken place at Bausted Holdings and its subsidiaries, the latest being the redesignation of Bausted's ED of Group Business Development, Izzadin Daud, as Deputy Group MD. His appointment was effective March 1st. Last week, Izzadin was made non-independent and non-executive director at 55.93% owned Pharmanyaga. He has also been acting CEO of Bausted Properties since last November and serves on the board of Bausted Heavy Industries Corp. There have been several new appointments since Datuk Sri Mohammed Shazali Ramli took the helm as Group MD in December last year. Bausted is currently in the midst of sorting out its house, unveiling its Reinventing Bausted strategy last month after parent LTAT decided to abandon its plan to privatise the company. A total of 17.9 million was taken from the coffers of Yayasan Akal Budi by former DPM Datuk Sri Ahmad Zahid Hamidi without him first getting approval from the charity's trustees, a MACC officer told the High Court today. The officer, Muhammad Fazli Zulkifli, testified that Ahmad Zahid had committed criminal breach of trust when he used those funds to purchase stakes in hotel management firm Ria's Asset between 2016 and 2017. The MACC officer also said that the reason why the investment was to be made was because Ahmad Zahid's daughter, Datuk Nurul Hidayah Ahmad Zahid, had an interest in the company. The former DPM is being charged with 47 counts of CBT, bribery and money laundering involving tens of millions of ringgit from the charity.